India is doing relatively better than a lot of other countries. And finally, India has reached a size where the world cannot ignore India. So I think in that way, India definitely stands out. The macro for India are the best among all large economies, So while everyone else is fighting with deflation, we are still fighting with inflation. So I think things can only improve from here.
We've seen a marginal degree of selling by the FI community. $4 billion in 40 days, not a large number if I look at the aggregate picture. But should one really read too much into what we've seen from the FI frontier?
So, FIs are also investors, and there are 3-4 buckets in which FIs can be demarcated. So one bucket is obviously the emerging market funds. And we have seen that large emerging markets like Brazil and China in particular have been seeing very, very rough times over the last 2-3 months. And as a result of which, obviously, the emerging market funds as a basket have not been performing. So when you have redemption in emerging market fund, India is already a big overweight. As you rightly said, that India has outperformed in a big way. So there is obviously a little bit of profit taking there. But what we are seeing, Nikunj, in a very interesting manner is that country-specific funds are now again coming to vogue. And there are large sovereign funds, large endowment funds and large investors who are now looking at investing in India exclusively, rather than going through an emerging market fund or a global fund. And I think that should keep us well into the positive territory as far as flows are concerned.
You've got friends and investors both in this part of the world, the eastern part of the world. What are the sound bites you're getting from them? Are you getting a sense that they want to buy Indian stocks on every decline?
So there is one category of investors who are positive, obviously, and they have been positive in India and who can understand the longer term story. And there is one class of investors who have not been invested in India, and therefore the hope is there that that India falls more, so they are able to invest. But I think all said and done, the conclusion is that every investor is looking at investing in India. It's only a timing issue, So there might be some investors who might believe that there is some time to go before the market start to move up, and there is one set of investors who don't want to wait, who believe that India is a great story, and they are already investing. So I think the mood is generally optimistic.
Do you think markets have discovered the bottom?
See, it's very difficult to say that, but very clearly the sharp correction has made the markets a little bit more healthy. In terms of the technical aspects, there was a little bit of froth, a little bit of overbought situation, which has corrected quite significantly over the last 2 months. We have now expectations which are very, very moderate. So from here on, the chances of disappointment are much lower than chances of positive surprises. And I think all this heeds out well. We have started to see government spending pick up. We are heading into a scenario where interest rates is a matter of time before they are cut further, whether they are cut in this month or next month. I think the question is only of when rather than whether. So I think we are moving into a good time territory.
So last time when I interacted with you, you gave me this lovely example of cardiogram. That time we were on the downside of the cardiogram. Will the cardiogram pick up now?
No, 100%, it's life, So it will keep on going up and down, and it will keep on being that way, because a flat line is dead, and I don't think India is in that category.
The heartening sign is that domestic investors have been big buyers. So $4 billion of selling, big number in 40 days, but that was gobbled up by domestic investors.
So again, there is a lot of interest from the domestic investors. Money is moving from physical assets to financial assets, which is very positive from a longer term perspective. The government is also encouraging investors to come into equity markets. The provident and the pension money started now being allowed into equity markets. So I think it's becoming more healthy. So right now, earlier we were only dependent on foreign flows. Now there's a good mix. And if you see September, August predominantly, I think a big chunk of the foreign selling was absorbed by the domestic investors, which lent a lot of stability to the market.
You will be part of a couple of panels tomorrow. How excited are you in speaking in front of the audience here?
I think we are passionate India bulls, and we speak by heart, and we really believe what we speak. So it's not just because we are in the business of asset management that we are positive. I think we genuinely believe that India is going to be a $4 trillion economy in the next 7-8 years, and there's going to be big returns which are going to be made.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.